you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So that was Cathie Wood of Ark Invest, a lady who I believe is going to go down as one of the all-time greatest investors of our generation. I know it's early to call that now, but I believe, given the way that she thinks, the way she's built the Ark funds, I think that they're going to outperform, close to decimate the broader market. Only time will tell. The clip you just saw aired in April 2019, just over a year ago, with Tesla stock in the 200s. And it's since almost quintupled, a 5x in value in just over a year. That really is a breakout. How did Cathie know? Why was she so confident? Why was she able to predict the future with such accuracy? Because she understands disruptive innovation and technology. The truth is, most of the broader finance media, most of the analysts on Wall Street, etc., just don't get this new world. Disruptive technology, exponential growth, cost curves. They just don't get it. It's a foreign world. This stuff is not intuitive. So unless you take the time to go down the rabbit hole and really educate yourself, not just a broad, oh yeah, cool, what's that exponential thing? Oh, okay, cool, computers keep getting better and cheaper. Yeah, cool, I get it, man. Unless you actually really go down the rabbit hole, because this stuff is not intuitive. You need to intellectually grasp with these concepts, because you can't just gut feel it. Your gut feel will not point in the right direction. A great example of this is if you ask somebody, if you walk 1 meter and then take another step that's 1 meter, so you're walking in a linear fashion, 1 meter, 1 meter, 1 meter, you do that 30 times, you traverse 30 meters. If you take exponential steps, you take 1 meter, then 2 meters, then 4 meters, and do that 30 times. You take more than 1 billion steps, enough to circle the earth numerous times. Most people wouldn't intuitively guess that. They might come up with a number that's certainly higher than 30. But getting to billions, no, unlikely. And this is the point. You have to look at this stuff and the underlying technology and see, where does that lead? If this continual cost decline or this continual improvement in technology, etc., carries on like it's been doing for 10, 20, 30, 40, 50, 60, 70, 80, 90, 100 plus years predictably, if that continues, what happens to this technology? What happens to the price, performance, etc.? So Ark Invest knew what was coming because they did the work and they understood this new world. And I think this is the point that I really want to make with this video. The people that so far haven't understood what Tesla was doing, either believed all the FUD and BS from the bears and the shorts saying that they had cash flow issues. No, they managed their cash flow very well and invested as aggressively as they could in scaling because they wanted to win this, which, I mean, we're seeing that happen now, okay? There was method to their madness, but some people just, they heard, oh yeah, Tesla, they're going to go bankrupt, and they looked and, oh yeah, I believe that. Didn't do the homework, didn't understand how big this opportunity was or why it was so important to invest so heavily and aggressively in scale. This is the reason that Tesla looked like it was a terrible business, because people that didn't go down, dig beneath the surface, had a quick cursory glance and thought, yeah, their financials suck, I'm going nowhere near that. Ark Invest, Cathie Wood, etc., people that really get disruptive innovation were looking at the trends, the technologies, not the quarter-to-quarter stuff. Oh, cool. No. They looked at the big picture stuff. They saw Tesla was executing against that inevitable future, and that's why they've won. That's why they've been able to call this. Obviously, the market's starting to see how far ahead Tesla is, but I still genuinely don't believe the wider market understands the disruptions that's actually taking place. It's like, oh, cool, Tesla's winning EVs, but EVs are very small. They're not that... No. EVs are going to be effectively 100% of the new vehicle market before you know it. People are still missing this fact. So despite the fact that Tesla stock has been on a massive tear recently, I still believe that there is plenty of potential upside for Tesla stock over the coming years as more people discover this inevitable disruption. Hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the links in the description to WeBull and Stake. Let's get back to it.
You tilt towards the disruptive type technologies. What exactly does that mean? How exactly do you hone in on the stocks that go into these actively managed exchange-traded funds?
Sure. Well, our screen is not a benchmark. Our screen is our research. Our starting point is from the top down, and we're looking for learning curves or cost curve declines that are associated with technology, and they're fairly consistent over time, depending on the technology. And from a timing point of view, we want to make sure that we're ready for prime time. So we ask the question, once we've figured out the cost decline, okay, for every percentage point decline in price, how much does demand increase? Are we ready for prime time? So in the late 90s, if we had asked that question about most of these technologies, the answer would have been no. And yet investors were chasing them and valuing them on eyeballs and other such things. Today, They are happening. We're ready for prime time. And the fear I see out there when it comes to volatility or disruption or anything that's not in an index is palpable. That's the real opportunity. The dream was too early. Anyone who chased it got burned. Today, they're afraid. They should be moving into it.
I think Cathie really put that well. Effectively, what she's saying, the resistance to people even considering exploring these disruptive technologies, is an emotional response. A lot of people got burned in the early 2000s, early 2010s, because they were a little bit too early, got a little bit too excited. And now, rather than coming at it logically, they've got those emotional scars. They just can't see clearly.
You at Ark Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year, and it's always been our largest position this year. And yet our fund is up 28%.
How is that? How does that happen?
Yes.
How does that happen?
It is because last year, when genomics was under assault because of reimbursement concerns and pricing concerns and so forth, we were leaning into those heavily. So you buy low, right? We were leaning into those. And so our second largest position, Invitae, which we think is one of the most important molecular diagnostic companies out there, riding down the cost curve of DNA sequencing, it's up 125%. It got as low as $5 last year. Today it's $18. So leaning into that has really paid off. And it's true with the entire genome sector. We're doing the same this year with Tesla, but our conviction level there is so high that it never left our top position.
And why do they have such strong conviction? Once again, they've done their homework. They understand the trends that are happening that are bringing these technology costs down, enabling more to be done with less for less.
We learned about their artificial intelligence chip. We saw the specs. And our analyst, James Wang, came from NVIDIA. That's what they're replacing. And he said, oh my goodness, and he's going to write something this Wednesday about it. This leapfrogs the competition. And they're at least 3, if not 4 years ahead of the competition. And then a few months later, execution went up when not only did they not lose in the third quarter $700 million, but they made, this is cash flow, $1.4 billion. So that was a miss in terms of consensus expectations of roughly $2 billion. That's what happens with exponential growth.
Once again, Cathie absolutely nails it. Next time you see a talking head on CNBS or one of the other networks and they're confused about a company or its valuation like Tesla, everyone's just scratching their heads for the last 6 months going, I don't understand, why is the stock so high? I don't get it. Ford's got this multiple, I don't get it. They're just a car company. You're probably seeing people who are confused about a disruptive technology, a form of innovation they don't quite grasp, and they haven't really got their head around it. So to them, it's just plain confusing. Ark had this $4,000 price target more than a year ago for a reason. Now that Tesla suddenly has broken out, people are going, wait a minute, taking a second look, what did I miss? What they missed was the inevitable disruption. Again, this is why it pays to understand the trends, the technology over time. Don't go look at the financials to try and figure out, is this company a good investment? Look at the technologies and industries they're moving into and disrupting and innovating in. Where does that lead?
Can the company not raise money?
Sure. Oh, it can raise money. I don't think Elon wants to do it at this valuation. I think he thought, and the company thought, that their autonomy day last week was going to give them a nice opportunity, that once analysts understood how far ahead of the competition they are, whether it's Waymo or Cruise, in terms of autonomy, and how soon it is going to evolve, and that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together.
Another fantastic point from Cathie. Why are the analysts consistently wrong about Tesla, and why have they been for the past half decade or more? It's because they have no fucking idea about the company. They don't understand. And I'm not disparaging the analysts who've been doing automotive for 10, 20 years and then get thrown Tesla to cover. It's not their fault they don't have any idea about Tesla, because they're not a car company.
We have set out our research teams, we've broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency in this stock. It is our highest conviction idea for a reason.
But I look at a stock like Tesla, and over a 5-year period, the stock's done nothing, with being one of the most volatile stocks in the world, at least of the mega cap stocks. So I look at, and I could cherry pick numbers, but I could say, really off the high of 2014, you're down 20% by holding Tesla for 5 years, when supposedly it had a huge competitive advantage. Yeah. There was no competitors in their space. Right. It was being priced as a technology company. And the stock really at a point where now it looks like there's some balance sheet issues. The competition's never been heavier, although I think you'll push back on that. I think I appreciate your argument, which is that they're not an auto company. They're not a tech company.
But even more, just let's take the electric vehicle. The Model S, 2012 it was launched. Yep. Not one of those competitors is anywhere near it. We're 7 years later. Now let me take your other point. This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of 2 things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe is going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
And with the benefit of time, just a little over a year, Tesla stock now sitting around $1,400 a share, confounding most of the mainstream media. Most Wall Street analysts still puzzled, not understanding what is going on. They're chasing the stock with price targets week after week because it's moving up. They're nowhere near it. The average price target on Wall Street at the moment is about half Tesla's current price. Still, the analysts, they just don't get it. And herein, in my personal opinion, lies a major opportunity. Until I see the mainstream finance media, Wall Street analysts consistently talking about the same themes and technologies and topics, declining costs, exponential improvement in technology, robotics, artificial intelligence, big data, they've got nothing useful to say about Tesla, in my personal opinion. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. By the way guys, if any of you are curious, how can I learn more about disruptive technology, exponential growth, etc., I'll recommend just one book. It was written quite a few years ago, which is even more fascinating to reread today because there's a lot of predictions about future technology. Called The Singularity is Near by Ray Kurzweil. I'll put a link in the description. Love you guys. And don't forget your free stocks with WeBull and Stake. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. And you can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.